Hello. We're starting now. I see there's many people starting to join us. We're going to start in 1 minute as Zoom lets everybody in. Really excited for the hour we have today with Monique Idlett and her business partner, who I have just met. So I'm excited. I've got two people I can pummel with questions. I don't have to leave it all for Monique.
Right, exactly. It just means 2 times the expertise, right?
Yes, twice the energy, twice the expertise. I'm going to try and leave some time for questions at the end, but I started writing questions and I took up literally 2 pages of my notebook, so I don't know. Well, you've done too much. I feel like you should be retired already, when you look at all the things you've done, but I'm sure you feel like you're just in the...
We're literally just getting started.
Just getting started, exactly. That's a beautiful thing. So while people are coming in, let me introduce myself and bam. So my name is Kevin Cadet. I am the Executive Director of Black Angels Miami. We are an angel investment club. Our goal is to increase the numbers of Black investors in angel investing. Angel investing is by no means diverse. It's the complete opposite. And we're taking a stand and trying to introduce the asset class to those that are accredited and help them see great companies to invest in, learn more about the space, people in the space, and introduce them to great founders. And I feel blessed in that we have many great founders reaching out to us. And I'm able to put them in front of people who are really genuinely interested in what they're doing and hopefully supporting them. So our well, I'm sure everyone knows our website, but it's blackangels.miami. We're based in Miami. We're a nonprofit. We started in January of last year. So we've had a very interesting journey through, the beginning of our lives as an entity. And I'm really looking forward to what we're going to be doing this year. Many great events, great companies, and great people to talk to, like Monique Idlett and Rain Ventures. So we're blessed today to be joined by Monique Idlett and her partner at Rain Ventures.
Erica.
Erica. I'm sorry. We just met, so I did not.
I know. Don't worry. I'll do my own little intro because I know you weren't expecting me. I kind of like dropped in on you.
Surprise!
Now, I was going to read through the bio, but it would literally take 5 minutes. So I will just say that it's an amazing journey you've had thus far, and I would like to give you the opportunity to let people know what they should know about you.
It's interesting because I was thinking about this last week, and I truly do believe that the course of my career kind of prepared me for this moment, with Rain Ventures. And I started my career as the youngest and first Black executive on the executive marketing side at USA Today. And there created my own branding agency that kind of served as a gap between talent in the entertainment industry and in the sports world with my corporate clients. And from there, my ex-husband and I, we created a music label and a publishing company that I was the acting CEO and co-founder for about 15 years. And then I was getting my executive MBA and happened to meet 9 years ago my business partner, Erica, and was really interested in the idea of investing in women and people of color as tech founders. And here we are today. We have a $50 million seed stage fund. We're based in Miami and New York, and we are truly excited to be able to really experience this new concept of this tech ecosystem here in Miami.
Yeah, and so I'm Erica Diagnan-Minahan, co-founder and partner of Monique at Rain Ventures. I'm actually based in New York. I'm visiting Miami this week so that we can get some work done. So it's wonderful to be in your very beautiful city. I know you're probably sick of all the New Yorkers coming down here, but it's very cold and rainy there right now. So I'm glad to be here. So, my background is I've spent my entire career in finance. The first 8 years of my career, I was on the sell side in investment banking. That's where a lot of people start off before they get into early stage venture capital, or they develop, an interest for investing in startups. Did my MBA at Columbia Business School. And in 2006, I had the fortune to pivot into venture as the founding executive director of an angel investor group called Golden Seeds. Golden Seeds is now one of the largest angel networks in the world and was one of the very first gender lens investing organizations in this country and globally, actually. So I got my start to, just doing angel deals with, a group of women who wanted to invest in other female founders and really found value there. And that thesis still stands today, not only for female founded companies, but especially for companies with Black founders. And having Black investors invest in Black founders, I think, is a really important catalyst towards wealth creation for the Black communities. I've actually founded 3 different angel investor groups, so I have a lot of experience. Was the original executive director at Golden Seeds. A few years later, co-founded an angel group called Star Angel Network, and that's where I actually met Monique and started investing with her. And then 5 or 6 years ago, founded a digital angel investor network called 1,000 Angels, which we still run today, which is kind of probably similar to what you guys do, except, it's all online, right? And it's not so much about kind of like meeting other people in the community, but just making investments. So, know a lot about the space, very experienced, have invested in hundreds of deals, and, really thrilled to share my background and experience with you guys today.
Yeah, I feel like you've both just answered like the first half dozen questions I had. The journey to get to where you are. And Erica, I may need a whole nother hour with you just to talk about being executive director of an angel group, just for my personal.
Oh, sure. I'm happy to do that. I will give you all the tips and tricks because I have learned a lot about how to do it properly. So how not to drive the founders crazy, basically, is the most important part.
So how much of your time are you literally 50-50 Miami and New York, or?
Yeah, so I hope to be. We actually have our first close on our fund this week. I think by the time we have the fund fully raised, I expect to be 50-50 Miami, New York. Miami's got so much opportunity right now. I think prior to the pandemic, we actually thought Monique was going to spend a little bit more time in New York, but now that's flip-flopped a little bit.
All in my favor, yes.
And yeah, it's actually really good for me too, because like Miami is just beautiful. And so I certainly hope to be spending a lot more time in the city and investing a lot more of my energy and expertise and our resources into the Miami startup community.
Yes, and I've personally have lived here for almost 2 decades. So I'm not new to the Miami ecosystem. This is my home. This is where I've raised my children. Our Rain Ventures offices have been across from University of Miami for a few years now. And so it is interesting to kind of see this new concept, so to speak. But we're really excited that Rain Ventures gets to call this home too.
So, obviously 2020 has been a seismic shift for Miami. We've both been here before the shift happened. So, me starting as executive director last January to where we are now, Miami's looked on in a completely different way, but I believed in the Miami ecosystem before the bubble, as I'm sure you did. So
I did, lots of great founders, lots of great ideas, definitely not enough capital, especially in particular for Black and brown tech founders.
Yes, absolutely. Do you feel like it's any different in Miami to New York when it comes to capital for those founders?
Yeah, 1,000%, but everybody has to start somewhere. So, I started venture capital investing in 2006. That was actually the year that First Round Capital was founded. You know, you guys have probably heard of First Round Capital. It's one of like the top, you know, seed stage venture funds in the world.
Yep.
Actually,
We had an event with them.
Just became an LP in our fund, which is pretty cool.
Yeah.
But back then, you know, when we were starting Golden Seeds, people didn't even think you could do venture in New York. Like people honestly thought we were crazy, which is such a weird thing to think because New York's like the financial capital of the world. So why would people think you couldn't
of traditional investing? Though.
Yeah. Why would people think you couldn't do venture capital? And so, you know, the idea was, oh, there aren't any startups here. And I think, you know, people thought that about Miami, but the way things change is, you know, by you guys getting in there and doing the work, right? You know, you create what you want to see and you've got to get in there. If you start making investments, if you start investing time and energy into startups, people will stay here because there's a support system, there's capital, there's resources. And I know that your mayor and, you know, government locally is investing a lot of time and energy to sort of create that support system.
Yeah, they actually just appointed, you know, a venture capitalist for 1-year term. I forget what her name is. I'll send it to you. But it is a focus, right?
And it kind of feels like Miami's VC ecosystem is kind of like where New York's was in maybe like, you know, 2007, 2008. So you guys are on the right trajectory and I think we'll have a great presence, you know, in short order.
Yeah, I feel like Miami's come a long way in a short amount of time. I don't know it's going to take this. I don't believe the story for Miami is going to be the same as New York or Silicon Valley or Boston. I think Miami is going to be Miami. I don't think that's a bad thing. I think it's a good thing. I feel like there's enough energy in people in Miami for it to craft its own path. I'm excited to, you know, I want BAM to be part of that journey. I think when we first started BAM, we wanted, you know, Black investors to be part of the fabric of what's happening in Miami. And, you know, we're on our journey in doing so. Where do you, Monique, this to you because you've been here for a long time. Where do you see the opportunity or where do you see the challenge as far as frustrations with helping minority founders and activating that capital to help them? And is capital the chief problem? You know, we're always talking about, we know capital is an issue, but is it the issue and the only issue?
It's not. Erica and I actually have been having conversations about this and figuring out how do we create the arm at Rain Ventures of an accelerator, right? I have met with a lot of founders over the course of the years. And one of the things that we realized is missing is kind of like that accelerator process in order to even prepare them to raise capital. We actually have really been talking about how do we create that so that it truly becomes the first foundation and then the possibility of capital. And even at Rain Ventures, we also know that even if they're a portfolio company, capital isn't the only thing that they need. You know, we give access to resources, to network. We're very hands-on at that. It's a very vulnerable stage for them.
Right. So you did say that you're just closing your first fund. So have you started investing in startups already, or?
Well, Eric and I have a 9-year track record. So before we created the actual fund itself, Erica has enough background and information to know that we were going to hear the word first-time fund manager a lot, right? So we strategically and intentionally for the last 9 years actually created a portfolio of 25 investments. And so our data room is already rich with information and success. And so that's literally what we did so that we could have some type of foundation so that we wouldn't have to hear that as much. And we were very fortunate because Bank of America came in as an anchor, Google, Russ Carson and his wealth office. So we have a lot of great LPs and we have a lot of great pipeline companies.
So I guess, would you describe yourself as an angel
No, we're
beforehand? No,
we're-
oh yeah, you're venture now, but back when you're
oh,
building your track record, yeah, you're not an angel now. You're fully VC, but when you're building, that portfolio of companies beforehand, were you coming in as an entity, or I mean, would you describe yourself as an angel at that point when you first started?
I'm going to answer this
Yeah.
question because I think it's better for me to answer this than Monique. So Monique is basically what you would consider a super angel because, she generally has written like sizable checks and also taken board seats. So it's a little bit different. Like, most angels, and very traditionally, and a great strategy, are in a group, they're doing 25K per deal, they're sort of just trying to build a diversified portfolio. Whereas a super angel usually is doing, bigger investments and, taking a more active role in the company. And this was really very intentional on our part because we knew that the long-term goal was to raise a fund. So, we've deployed a little bit over 3 million into the tech startup investments that we've used to basically build our track record. And so that's a combination of personal capital and money we've brought in through SPVs. So when you say like, has it been done through vehicles or personally, that's kind of how we bootstrapped our way to a track record, but very much with a venture investing approach because we knew that it was the foundation for a fundraise. And, that really requires kind of like a different strategy for thinking than, just somebody building a more traditional angel portfolio.
Makes sense. You mentioned a word which I like to talk to as much as possible because I don't think many take it into account fully, and that's diversification. In that I have met some super angels even. Well, I think they're super angels because the checks they're writing are that big, but have felt burnt because they've put all of their energy into a company and then that did not work out. And then they're hesitant across the board after that. Can you talk to the value of being diversified and not putting all your eggs in one basket when it comes to investing in startup companies?
Yeah, I mean, I could talk about that all day. So I actually have a YouTube channel. So, if anyone wants to, I mean, there's literally like hours of me just talking about these things on YouTube. If you go on YouTube, my channel is 1000 Angels. And we also have a bunch of videos, like interviews that Monique and I have done together called the Series A List. But yes, so if you're taking like a traditional angel investor approach, diversification is key. At the end of the day, like, you're not smart enough to figure out which one is going to be the winner. In our angel groups that we work with, I encourage people, I say, listen, figure out what you want to deploy each year. If you're looking to build a portfolio and you can, deploy $100,000 a year, then make sure you're doing 4 things at $25,000 each. I definitely so I worked a lot with athletes. Like that's how actually the group that Monique and I, first met and got started with was athletes. They love to be like, oh my God, I saw this great company. I'm putting $500,000 into it. I'm like, You're not that rich. Like you have to be super, super rich to be able to put $500,000 into one company, if you're just doing this to create an angel portfolio. So take whatever you want to, invest per year, divide it by like 4 or 5. And then, that you want to try and add, maybe 1 deal per quarter, right? That's a perfectly fine pace. And then do that over time. And where you're going to find, what you're trying to do here is create option value. So you're getting in early, you're getting on the cap table. And then once one of those companies really takes off, you're now able to maybe, if you want to deploy more money, you can deploy it when the company is a little bit later stage and it's de-risked. So generally, you're going to have best risk reward ratio, or sort of Sharpe ratio at the Series A and the Series B. That's where you get the most value, and whatever sort of venture fund is leading the round is creating a lot of value within the company and getting you really good pricing. And because you put in a little bit in the beginning, you're actually going to be able to participate in those rounds and kind of like maximize not necessarily the nominal multiple, but the multiple on your money for the risks that you're taking. So that's why diversification is so important to the strategy. So listen to Kevin. Don't get greedy on one thing. You can't predict the future, but realize that being in a deal gives you the option to put more in the deal when the company has sort of proven themselves a little bit more.
And as Erica said, our strategy was very specific to, we knew we were creating a fund one, a fund two, so our checks had to be larger, but we wouldn't do that traditionally.
Yeah, because like if you're raising a fund and your track record is like angel investments, they'll be like, oh, well, you were an angel investor. It's a different thing. Do you know how to do fund investments? So we kind of needed to do bigger checks to show that like, no, we were deploying, because our initial check size is somewhere between 500,000 and $1 million. So they needed to see from us that we could actually deploy larger checks into like the types of rounds that we invest in for the fund. But for an angel, strategy, smaller checks are absolutely fine. And it's also a perfectly good way to start building a track record if it's appropriate to your net worth.
Yes.
So for for people who are new and they're cracking the ice as far as making investments, there's so many different companies out there. There's so many different opportunities. What would you say they should focus on? Because otherwise you're just, you're like a deer in headlights with, oh, you can put your money here. I mean, there's so many different options. Where should they start? And one of the things I feel like we're giving, as a club, we're giving them many options. I'm putting in front of people pre-seed, like haven't made a dime yet, all the way up to a company which is about to close on a Series A.
Yeah.
And
I'll use my personal experience. When I was introduced to angel investing, I selected companies that I felt like I could contribute something to the founder. It's a very vulnerable stage. And so I selected companies that I felt like I understood the team, first and foremost. And secondly, who else was investing in them? And most importantly, how could I truly be an advocate for them? How could I help them get to different stages? And that's how I actually started practicing angel investing.
Yeah, but Monique was also, from the beginning, took a diversified approach. So like, if I think about with our Star Angel investment, so when I started Star, I think in the first year we had like 6 deals, and she put money in almost all of them, like a small amount in the first sort of 6 deals that we had that first year. I think there was maybe one that you missed, but it was more because like you were busy with something and so you didn't get a chance. And it's kind of funny because it's like one of them, right now is already up like 50x from where we first invested. So if she had left that one out, like the portfolio wouldn't have performed as well. But because she listened and was like, yeah, I get the diversification thing. I'm not going to try and predict, the winner, put a little bit into each one. And then if there are, subsequent opportunities, that's why the portfolio has worked. And that's why you join an angel group, right? So Kevin, your job is to take, the universe of all sorts of nonsense that's out there and once a quarter, you want to probably once a quarter, you want to give your members like 2 or 3 things that they can maybe pick from, probably even 2, because people don't like to have a ridiculous amount of choice. And if you guys as a group can all get behind like the same companies, there's increased probability of success.
Yeah, I'm going to tell you, I heavily relied on Erica. I was calling her all the time. I was asking questions. She was doing in-person group stuff with the founders. And I truly didn't try to be the expert on something I didn't know anything about. And I started learning and, but I trusted what she was brought to us to, to teach us and help us with. And it was a really positive experience, enough to where I knew I wanted to step down as CEO of my own company to go and help fix this problem of women and in particular Black people not getting funded, at the early stage.
how often has it been that one of those companies you were on the fringe of investing in turned out to be one of the good ones?
That we didn't
That
invest?
turned out to be like, you never would have thought this company would have been a 50x, but you put a little bit of money in and you're like, wow, it really took off. Like, how often are you surprised?
I believed in every company that.
You believed in everyone.
If I was putting my money in, I believed in it. If Erica was referring it, she believed in it, so.
Okay.
I mean, you can answer, but I just know I truly trusted her judgment and her due diligence on the company. And I would not have, participated if I didn't actually believe that it could do well.
Yeah, I know in my personal experience, being in accelerators, meeting, knowing founders, people I love, people I support, sometimes, things don't work out, and that's okay. But, some of the companies, I would never have guessed would have been as big as they became. So you really can't, no one's got a perfect picker. It's difficult. So you are now based, you have been based, you are based in Miami. Are you are you purposely looking for companies in Miami, or are you focused here? I'm sure you're looking at companies from everywhere, but is there going to be some kind of extra energy put into Miami with everything that's happening and the founders we have here?
I mean, yes, we actually have, Evan from Kitty Credit. We're doing some, due diligence with other founders locally. Listen, Miami is a really important market to us. We've always wanted to play in the underserved communities and cities. So it's, Miami, we'll look at as many companies that we need to,
And I'm just wondering, how big is the team at Rain? I know you're gonna, space. I didn't know you had space on South Beach. I know you have your office near University.
We're actually in one of our LP's offices right now.
Yeah.
Our regular office is in South Miami.
Yeah, we're in Sunset, like right across from University of Miami.
Yeah, and you can see he just moved in, so it's like
bare
an
wall.
empty
Yeah.
box.
Gotcha.
But yeah, we've had offices here for a few years now.
And as far as your LPs, are you seeing many of them move to Miami? I feel like everybody's like migrating to Miami. Every conversation I have is somebody else is moving to Miami. So is it real for you personally? I mean, in your brain?
They've had property here.
Yeah, our LPs are like really, really rich older people. So of course they are spending the winters here. That's like a natural. I mean, not all of them are older, but they're people who who definitely have a place somewhere, Palm Beach or here.
Yeah, so. Fisher Island, places like that. But this particular LP did just move to Miami a year ago.
Okay. So how are you finding your deal flow, or how should founders approach Rain?
So the first part of it, how do we get our deal flow? I mean, collectively together, 25 years of experience, we get access to a lot of deal flow. But what I take a lot of pride in, and I know what Erica takes a lot of pride in, is that founders actually refer founders. And for us, that's very special. We work really hard to build really good relationships. As Erica's expertise, I mean, every founder, wants to talk to Erica. She's been a part of that early, stage for a long time. But between the founders, our speaking engagements, our board partners, we definitely have amazing deal flow.
Yeah, and the other thing that I just want to remind everybody, and sorry, is the audience like mostly investors or investors and founders who are looking for
investors and founders?
Yeah. So, the thing that's so tough about fundraising is that, number one, when you raise venture capital, It's basically a marriage. Like you and us are going to be together for a really long time. And so if we don't like love you, if I don't think about you and think like, oh, I love that, it's probably not going to happen.
Right.
So, just realize, like, for example, we're raising a $50 million fund. We're only going to have 20 portfolio companies, max 25. And we have like 3 years to pick who those companies are. So that means every year, we only maybe get to select like 10 people that we want to work with. And of course, there are like thousands of people, that are reaching out to us. So if you're looking for a capital partner, don't, like, a lot of people think it's like, oh, well, you said you invest in consumer tech and software, and I'm consumer tech and software, and I need money. So like, obviously you're going to invest in me. I mean, that'd be kind of like, if you went on someone's like Match profile or Tinder profile and you're like, you said all I had to do was be 5'10" and like, XYZ things, like we should get married. So, it's very much about like the relationship, the fit. As an investor too, what you're doing is it's what we call a gray market, right? So that when you're buying a stock, it's very easy to see like comparatively, I'm going to buy Apple because the PE ratio is the best right now, or I'm going to, buy, like, you can compare everything and it's very obvious. And so we are doing the same thing, right? Which is that we're looking at the thousands of opportunities of potential investments that are out there, and we're selecting the ones that we think offer the highest risk-adjusted return potential. So it's not just, is your company good or bad? It's like, okay, which one do we think has the highest amount of return potential for the lowest amount of risk, with a team that we think is uniquely qualified, that we think, has the potential to build a $1 billion business, that where we think we're going to have a really great relationship with them, and we want to spend the next decade of our lives doing everything that we can to make sure that those founders are successful. So it's really like a very, very high bar, to be able to form a capital partnership with any venture firm, but it goes much, much deeper than just sort of like, what's your idea?
A really good example is Coco and Breezy. One of our portfolio founders actually introduced us on purpose. And for 3 years, I've mentored, we've supported them, and now they're coming into the Rain Ventures Fund. And so it's about relationship building. And anytime you're investing from a VC perspective, we have to understand how you deal with adversity. We have to understand your value system, all of these things, because it's a really, really stressful, vulnerable place to be in as a founder. And so there's a lot of things that go into the decision-making process.
And I think someone made a comment about warm intros. So like, warm intros seems unfair, but basically the difference between a warm intro is like, if you think about it, we're just getting a lot of solicitations. So like, for example, one founder that we've invested in twice that we're really close with is Rodney Williams, right? So like, we know everything about the way Rodney looks at the world and his ability to create successful companies. So if he sends me an email saying, hey, Erica and Monique, I'd really like you to meet XYZ company, like, we have to, we have to respond. Like, we're gonna respond. So that's sort of like the difference. I mean, it's not like warm intros are the must have, but the reason that it helps you is because if somebody that we have a relationship with and we value their opinion can make the introduction for you, then there's just a lot of levels of information, that have sort of gotten through with us without us having to do a lot of work. And so that's why, warm intros are considered good. So certainly, a great way to get to a certain fund, is through introductions from their successful portfolio company founders, if you have those relationships. And if you don't, this is a long-term game, get involved in the ecosystem, see how you can support people who can make those intros for you, and then when the time comes, they might know you well enough to extend, some of their social capital for you.
And it's important for founders and investors both to understand that this is not just about the capital piece, right? you should want to, as an investor, consider how else you can support a founder through resources, networks, introductions, and founders should also consider who they're taking capital from. Is there additional value that everyone's bringing to the table? Because as Erica said, it's a long-term partnership.
So continuing that analogy is a relationship. How long's a typical courting time? Like, is it, you become an advisor, you watch and you learn, and you get to know them over how long? Is it 3 months, 6 months? I mean, it could be years.
Varied. Every company has been a different experience. Every company is in a different place. Every founder is different. It's company by company basis.
And you can leverage those relationships. So like if one of our LPs that we, really love and really trust is like, oh, hey, I've known this founder for a really long time and, I think they're great and you should, look at their deal. We've now skipped over some of the time requirement of it. You know what I mean? So it's really case by, or if you come to me and you're like, I don't know you from Adam, but you're like showing me, hey, here's our amazing product. And by the way, we're growing revenue 50% month over month, we probably have to spend less time together, so it is completely on a case by case basis.
And, one example, Rodney, right? We invested in Listener. He co-founded a second company solo. We didn't have to know Travis right? We just we trusted what Rodney said. So that, it just depends. It truly does depend.
Yeah, and we've had solo present as well to BAM. Great company. And then I forgot what I was going to ask. Brain freeze. So hold on 1 second. I had a really good question. And I am going to leave some time, just quickly looking at, Q&A and chat. I see some people with lots of questions there.
Yeah, Mark, while you're thinking of your question, Marquia asked one.
Yeah. How would you advise startup founders to decipher whether funds committing certain amounts for Black founders is performative activism versus not, particularly for funds without a track record of diversity investments?
I guess I'm trying to
so I think I understand your question. So, I wouldn't worry about this. I mean, very rarely is a founder like really, I get what you're saying, but, generally, it's very rare to be like, I'm sort of picking and choosing between VCs, it's really, really hard, to find investors. I think that, any of the commitment to Black founders is performative activism, but I think you should absolutely take their money, if it's going to make a difference in your business. The most important thing is for you as a founder to realize whoever I take this money from, I'm going to be stuck with them for the next 10 years at least. Within 10 years, they're going to be telling me, how are you going to give me my money back times 10 or times 20? So if you don't, you want to make sure that whatever partner is working on your deal, that like you trust that person, that, you feel like you have a really good relationship with them, that you feel that they can add value to the company, and that it's somebody that you want to be talking to on a weekly or, bi-weekly basis, because you're going to be spending a lot of time, and building a close relationship with that person. But, around sort of the recent trend to like increase their numbers, these funds all have to increase their numbers because they're getting called out for not making the investments. But, at the end of the day, I don't think, even if it is performative, it's probably beneficial for you because it's getting, you're now getting a more reasonable shot at raising money from that fund.
Yeah. And I think it's important to not try to take your own assumptions onto potential partners, right? I think that as founders, especially Black founders, you have to let the guards down. Okay, this is a business. This is business. You're trying to either scale to public, merger, acquisition, something, but at the end of the day, you're creating something to actually make money. And I think that you have to understand it as that. If this is not your like friendship circle where you're, this is literally about business. And I think that it's okay to let your guard down to make smart, wise business decisions. So I think that's really important.
So, hey, Kimberly Marshall.
Oh,
how
hey, Kimberly. We love Kimberly. Thank you.
I'm going to have to start putting Kimberly on camera with me because everybody loves Kimberly.
Yes, yes, bring her up. We love Kimberly.
Also, she said something really nice in the Q&A, so we'll let her.
I'm going to ask my one last question before we jump to Kimberly. And if people can write their questions into the Q&A, it will be very helpful because the chat is getting really long, so it'll help us out a lot. So we've talked a lot about what founders should do, shouldn't do. I think I get frustrated, or I have a pet peeve with one thing for founders. Well, one of many things, because no one's perfect. But when asked, nobody's perfect. But when asked, what do you see for the future? What is the exit? And then not only not having any formed idea, but literally saying not wanting to exit, then, if you don't want to exit, okay, that's fine, but you better have a good reason for someone to invest in you if you never want to exit your company, right? Like it's just
better
not
sell it and go create a second one.
Yeah, do the same thing again, but the investors are putting money into your company for a reason. What is what is one of your things which, founders shouldn't do when approaching Rain? Just one.
Should not do?
Should not do.
Oh, I mean, I don't know, Monique, maybe she doesn't want to, say anything. She'll look like, she likes to bad cop me. She'll be like, oh, Erica, I don't have any pet peeves. It's like, you're the bad cop. I'm the fun one. I'm the fun one. She's the diligence one. I'm the party mom. So I think that, the one thing that I don't judge founders for this at all, but, is frustrating because, and I'm always happy to volunteer time and educate people. And like I said, YouTube channel, it's there. You can go watch everything. You'll hear my entire investment philosophy on there. But a lot of startup founders believe that they set their own valuation, which is not true. So your valuation should really be established by a lead investor who's going to, offer a term sheet, suggest a valuation, suggest terms for investment. So, oh, sorry. Hey, Kim, there was just a little background noise. So, that's kind of my one pet peeve is founders who haven't really done appropriate research on capitalization strategy. And they think that they're setting the valuation for their company and don't understand that, it's kind of should be something that more is created based on what investors are willing to pay and sort of really understanding the appropriate amount of return investors expect. Some founders think, oh, you know what, invest in my startup, I'm going to double your money. And it's no, we actually need 40x. You didn't know that. So, really sort of understanding, what's market, how big the company needs to grow, what sort of financial return, doing that research in advance can help make the conversation a lot easier.
And, I'll add something, and I don't want to say do not do, I'll say something to consider, right? Founders get very, it's like they're babies, right? And they believe that having 100% of something is better than trying to build with a team and co-founders. I can tell you that Eric and I have never invested in a solo founded company. It does require a team. Eric and I have complementary skill sets. We don't do the same thing. There's no way that we could run a $50 million fund by ourselves. So you have to think about team. You have to think about co-founders for sweat equity and you know, accountability to your business model. Do not be afraid to have a team that does not make you look vulnerable or weak, that actually makes you look strong and like a leader who knows how to delegate.
Yep. Thank you.
Oh, and then the other thing too, which I think is really important, which is the hardest thing to do, is like you really have to practice just having a very thick skin, because sometimes, you know, people will say their pitch and then, you know, like our job is basically to give you critical feedback. It doesn't mean that we think your business isn't going to work, but you know, that's the whole nature of even working with a capital partner, is like our job is to identify the risk areas and to point them out and to resolve them. So you've always got to like completely not take any of this personally, you know, put your smiley face on. My strategy that I always tell investors, that I always tell founders to do, is when you're answering a question to an investor, always start off by saying, you know, that's a really great question. Because even if what you're thinking is you effing a-hole,
Right.
Okay, it's just gonna like, just by saying that, it's gonna put you like on, you know, on a forward foot, instead of a like, well, why are they asking me that? They don't believe in, you know. So just realize that like, it's very, very challenging to be able to take critical feedback, you know, and have a really positive attitude about it. The number one quality that most investors are looking for in a founder is something that we call coachability. And that basically means that, you know, you can take ideas constructively and with a positive attitude.
And in saying all of that, Erica and I have never turned a founder away of support, right? Like, you know, sometimes they're just not ready for capital. Sometimes it's just not our thesis. But when appropriate, we actually try to, you know, direct you in the right, you know, at least to the right direction.
That's great.
Hey, Kimberly.
So
Hi, ladies. Be nice to the founders when you're asking them questions. Don't like grill them unnecessarily. This isn't like gotcha, you know, an opportunity for gotcha, you know. Like that is one of the things I can tell you about angel networks. Don't let your angels do that to the founders. It's not target practice. You're not there to prove how smart you are. You know, you can ask questions, but also be really cognizant of their feelings, because, you know, they have feelings too. Yeah. They've worked a lot on whatever they're building, you know, so try to be as nice as you can.
Hey, Kimberly.
Hi.
We love video on. We want to see you.
I think my video. Yeah, Kevin, maybe turn it on. I'm not sure how that works.
I will see what I thought I. Okay, I've got you. There you go. You should be able to. Are you with us now as far as video? Well, yeah, I can hear myself.
Oh well.
So while Kimberly is coming up on camera.
Here, do it again.
Do it again.
Yeah. Okay, got it.
You got it. Okay.
Yeah.
So very quickly, everybody who is not familiar with Kimberly, Kimberly is a founding board member of Black Angels Miami, and I would put her into the classification as super angel. I don't know if I think you're a super angel, and happy you can join with us. And I think you should be here all the time because everybody loves you, and you're always asked for us.
Kevin, that is really nice. Thank you all so much for inviting me up. I asked a question in the chat, which is how this happened, because Erica and Monique are so fantastic, and it's such an honor to have you all here with Black Angels Miami. I know everyone has loved the conversation. My mom's actually visiting, and she has learned so much and really enjoyed this too.
We love your daughter. Thank you.
My mom says hello. But the question from the chat, which you've largely answered, is founders love you. You know, you have this amazing investing track record, which is all you. But you also have this incredible reputation with founders, also all you. So my question in the chat was, what is your founder superpower?
You know, I'll say this, is that I've always just understood that I'm just a human being. I think that there's a humanity that has to go in anything that you do in life. And the more successful I personally became, the more I made sure that not only was I being the example behind the scenes, but that literally in front of others who maybe didn't understand that, practice that. But Eric and I are also both founders, right? So we truly do understand how overwhelming that feeling is. But most importantly, why wouldn't we want to make sure that they are their best version? And if we can contribute to that, it's you know, it's a mutual exchange. So we need them to be their best version, and we need them to be honest with us. We need to be able to, you know, help them with the pain points before they become over, like where you can't help them, right? So we take all of those things into consideration.
Yeah, and you know, I think that's, you know, first of all, Kim, thank you so much for saying that. We really appreciate it. You know, I think it's a couple of things. So number one, you know, I'm really lucky to have a partner like Monique, because we're very different in personality and in temperament. You know, I've also been doing this for a very, very long time. So I was a managing director for DreamIt's accelerator. We have like a, you know, 12-week accelerator plus a fund. And, you know, I definitely have made some founders cry before. So, you know, I'm definitely like, you know, can be the tough one, but, you know, I'm like, you need to cry because your financial model is crap and it needs to be, you know. So, you know, I think we really understand, like, first of all, we're both moms. So, you know, we know how to nurture people. You know, we definitely know how to kind of, you know, support and, you know, not demand, but like require, you know, sort of in a very, you know, sort of with nice equilibrium, right? So there's like, we have great expectations to you, but also, you know, we're here to support you in everything that you do and maximize your success. And I would say that the number one thing that our founders find with us is that they can absolutely trust us completely. Yeah. So once we're invested in a company, you know, the founders know that they can trust us 100%. Whether, you know, the company is doing great, you know, life is still stressful. If things are going wrong, life is still stressful. We are there for them 100% in both situations. And we're not judging, you know, nobody's ever personally judged, because we know that, you know, venture investing is all about taking risk, right? So like, we're not here just to invest in like, you know, sunshine and rainbows and roses and everything's going to go, you know, go up and up and hockey stick. You know, we know that part of this is that we're taking on really challenging risks that people need to work through. It's going to be their blood, sweat, and tears. And, you know, what we're here to do is to come in with capital, but really also come in and surround them with a tremendous amount of emotional support and let them know that we're behind them no matter what the outcome is, right? And I think because of that, you know, we've been able to have really fantastic success and maintain great relationships with people. You know, I mean, one of our board partners, you know, David Ronick, you know, he's a serial founder. You know, he's founded, I think he's on his 5th company. You know, one of them is already valued at, I think the last valuation was like 1.5 billion. You know, that he started that like 5-6 years ago. So in 5 or 6 years from 0 to, you know, 1.5 billion. But he also had another company that we invested in, you know, that after like, you know, a year and a half, you know, he returned capital. He was like, you know, it's not working out. Sorry, guys, you know, you'll get 50% of your capital back. So, you know, I think that you really have to be the type of investor who understands that, you know, you can invest with the best people, and, you know, whether it ends up being $1 billion company or it ends up not going the way that, you know, we wanted, that we still respect you, we still love you, we still trust you, you know, that you're doing your best and the right thing, and that we're going to be there to support you no matter what the outcome. And I think that most importantly, you know, one of the things that we're really excited to do with Rain, because we are, you know, able to deploy larger checks, is to take board seats. And I think any founder knows that if Monique and I are on the board, that we are going to be staunch advocates for them and make sure that they're protected during the entire journey. And that is priceless. So that's how we do it.
And you know what? At the end of the day, we see ourselves, right? You have to identify with something. And my goodness, if that was my child building a business and someone invested in them, I would want them to treat them with dignity and integrity, no matter what was happening. And so we take that very serious.
I'm thoroughly enjoying this conversation, and I really do not want 6 o'clock to come. I'm gutted that we've got to stop. Well, I'm assuming we got to stop, but
yes, we have an event.
yes. But with the last couple of minutes, let's try and answer some of these questions really quickly.
Kevin, can you also can they also speak to just how we can be a part of their fund? If they take on individual investors and that sort of thing?
We absolutely do. So number one, we take on individuals. It's a priority for us to have more Black LPs.
Yeah.
Right now we are woefully short on Black LPs. So, it would mean a ton to us. We are going to have some amazing LP events in Miami. And let me tell you, our LPs are some of the most phenomenal people on this planet. So even just being at, being in the room at our LP events with these people is going to be worth, the price of admission, much less the fact that, we are obviously projecting, very robust financial returns for this fund. But number one, absolutely, if you want to be an individual LP, great. Kevin and Kim, we can also talk to you guys, if you wanted to put together some sort of a pooled vehicle, although that's probably not necessary because, I don't know, we can see, up to you guys. It's probably
we've done it before, and yeah, we can definitely talk about it. I would love everybody that's a member of BAM or wants to be a member of BAM to have that opportunity.
Yeah.
Because
the other thing
that's
I
why
want to mention that I realize a lot of people don't know about venture funds. In fact, some of our LPs who are literally private wealth people are what? This is the case. So when you invest in a venture fund, so number one, there's no taxes on basically any of the gains because almost all of our, we expect all of our investments to be QSBS qualified. So you totally avoid paying federal and state taxes on the gains. Number two, if you were to make a $200,000 commitment to a venture fund, you don't pay the whole $200,000 at close. So 30% of the capital is called on day one. So it's only it would be 60 grand on the first close. And then, 20% year two, 20% year three, 20% year four. And then usually by year five, there's some return of capital, but you could end up, sort of the last 10%. So it's a multi-year commitment that happens over time. It's not oh gosh, you're writing some huge check on the first day. And we just realized that a lot of people weren't aware of that. So, everybody should kind of know that your commitment, happens over the course of a few years.
So with that, I couldn't think of a better reason for all those on the, thinking about joining BAM. We're going to look into this. So, if you want to take that journey with us, you can reach out to me directly. My email is kevin@blackangels.miami. That's probably the very best way. Also through our website, you can contact us, but my email, Kevin at the URL, is the best way. Erica, Monique,
Erica at rainbc.com, Monique at rainbc.com, and connect with us on LinkedIn, follow us on Twitter.
Check out the YouTube channel.
The YouTube channel is 1,000 Angels, but you can look at my name too. But there's loads of videos for you to watch on there.
And then we have our Series A list as well. So.
Yeah.
Okay. Thank you so much for your time, and for everyone out there, thank you for joining us. And we're gonna have so many great events this year. I can't wait. But Erica, Monique, hopefully we can meet in person soon.
Yes, we're here.
And thank you again. Thank you, everyone.
Thank you. Bye-bye.
Bye. Thanks, BAM.
Bye, Kim.